Sandip Sabharwal is with us on the show, so let's get in his take then. And Sandeep, let's get a little bit specific in terms of individual stocks and talk about IHCL's quarterly performance. That's been pretty encouraging to say the least. Brokerage is giving it a thumbs up, saying that margins will sustain going forward, profits are expected to grow, and the ARR view is indicating that there's no sort of a slowdown in the sector.
I think on one hand, the sector is overall doing well, and on the other hand, Indian hotels with its strong brands and limited supply on the five-star side, room side, is doing much better than many of the other listed hotel companies also. The growth in the second quarter was exceptional, especially given the fact that last quarter, same time, we had some base of the World Cup as well as G20, etc. So, not only did growth sustain, margins also was very strong, and the company has indicated that outlook continues to be strong with a strong October and uh, most of the newer properties also doing well. Some of the new businesses picking up, expansion on that side. I think nothing negative in the result per se, and that is also reflective of the way the economy is actually performing. Where there is a clear dichotomy between some sectors where consumers remain happy to spend and other sectors where the demand is subdued.
Sandeep, curious to know what to do with Trent now. That 7% fall, unfortunate as it may be, but the stock has been sitting at peak valuation. So a little bit of a miss, or the fact that it didn't quite match up with street estimates, that led to this kind of a fall. But do you buy Trent now after this fall?
The stock needs to settle down because not only did the stock go up so much, but it also became very fancied among the retail HNI investors. So I think one disappointment. So I think a couple of quarters of disappointing earnings will create a scenario where the stock could come down to more reasonable levels. Historically, we've seen over the last few years the stock never sustained at lower levels after the correction. So that's something we need to monitor. But valuations obviously are high, and every time we have discussed over the last few quarters, the view was that because the company is surprising so strongly positively, the price is sustaining. So on a negative surprise, a similar sell-off was imminent, and that's played out. So stocks down around 20% from the top, not so significant still. So that's, yeah, I would think that we could see some more correction before the stock settles.
So what would be a comfortable level to buy, or how much more of a fall would make you actually buy into Trent?
For me to buy fresh, stock has to come down very substantially. So, and I don't know whether those levels will come or not, maybe below 5,000. So it's very, because the valuations are really stretched even at these prices. It was obviously stretched at 8,000, but even at 6,500, it's really stretched. So we need to track. Maybe the view can change if they perform much better than they did this quarter, but then we need to track it and take it as it comes, but not at this price.
Sandeep, what would you like to know from Tech Wabag? I mean, this is a stock that you've been holding for a while. Finally, it's picked up pace and it's been doing very well. But what more would drive conviction for, say, the long haul for you?
Yeah, execution has to pick up and O&M revenues have to start coming in. So I think those are the two things we have to monitor because the company has indicated O&M revenues will start, and once that starts, cash flows will be better. And they've been winning orders, but the pace of execution needs to pick up. See, margins have picked up, everything is great on that front. Cash flows are strong, but I think they need execution pickup, which I think should happen from the current quarter and going into the next 2 3 years because of the orders which they have won over the last 18 months. A lot of them will become fast execution runs. I think the pace of execution is the key for the stock to do much better from the current levels.
Okay, meantime, let's find out what our top market experts that we've been interacting with as well on the channel make of the market. And Mark Mobius is whom we spoke to. Where is it that he's seeing value? He used to be bullish on Vodafone Idea, but what's his stance after the recent fall? What is he like within the banking sphere? Let's listen in.
We're still looking at it. We haven't made a decision on that yet. ICICI is much more diversified, number one. And by the way, I must say that we're not big fans of banks to begin with. It's quite unusual that we would go into banks simply because they generally tend not to be too transparent. But I think the difference with ICICI is that it's very well diversified. As you know, there've been some massive semiconductor investments taking place in India today. So it doesn't mean that manufacturing will stop or decline in China. What will happen is the high labor input manufacturing in China will move to India and to other parts of the world because labor rates in China are going up, not down, and also the population is aging. So the combination of these factors will be very, very beneficial for India going forward. And I believe India will become a major force in high-tech technology, innovation, and manufacturing. Of course, when the markets go down, it's a good time to be increasing. So when you see a correction, doesn't mean that this correction is over. You probably see a little bit more downside, but it's a good idea not to worry about these short-term movements. Look at the long-term growth of the Indian economy, which is continuing. And now with Trump coming in, I believe the global economy would be much better.
Okay, betting on Trump's comeback and what it would mean for the global economy. But Sandip, today you've got SBI's numbers slated. The stock is still relatively cheap as opposed to some of its other peers and especially the large private banking names. But what's your anticipation from SBI?
The critical thing to monitor for SBI is that one, they went very strong into unsecured lending and most of the other private sector banks over the last 2 years are cautious. So does that lead to a deterioration in asset quality? And secondly, the overall asset quality picture for SBI. And thirdly, how the CASA ratio is panning out for them. I think so these two things will be key to watch because there has been some expectation of a deterioration in asset quality, which is not reflected in some of the other large PSU banks like PNB, BOB, etc. I think the asset quality has held up. So if the asset quality holds up, then stock could actually potentially do better.
All right, meantime, lots happening as well when it comes to the upcoming IPOs, and in particular, all eyes on quick commerce giant Swiggy's IPO, which has opened for subscription. What has the subscription numbers on day 2 been? Remember, Swiggy plans to raise 11,300 crore rupees. The price band has been fixed at 371 to 390 rupees a share. And more importantly, what are the brokerages suggesting? Let's get in a roundup. We've got Snehi here to break it down for us. Snehi.
Well, yes, so it's the last day, the third and the last day to subscribe for the Swiggy IPO if you wish to do so. And let me run you through what the subscription status looks like at the end of day 2, 5 p.m. The QIB portion has been subscribed 0.28 times. The non-institutional investors, which is the NII portion, has been subscribed 0.14 times. The retail individual investors have subscribed to the IPO 0.84 times. And the employee portion, now this is the only portion that has been oversubscribed at 1.15 times, which brings the total subscription status of this IPO to 0.35 times, which translates to a mere 35% subscription of the IPO at the end of day 2. Now, here are some IPO details just to refresh the details of this IPO. A lukewarm response has been seen over the last 2 days. The IPO size is of 11,327.4 crores, out of which the fresh issue is 4,499 crores. Offer for sale is 6,000 to 828 crores as well. The lot size is 38 shares at a price band of 371 to 390 rupees per share, which makes the minimum retail investment 14,820 rupees per lot. Now, what's also important to know is that a discount of 25 rupees per equity share is being offered to eligible employees bidding in this the employee reservation portion of this IPO. And we expect this IPO to make its D-Street debut tentatively on the 13th of November. What are brokerages saying? What's the view coming in from brokerages so far? Subscribe for long term is the call coming in from Motilal Oswal as well as SBI Securities. A subscribe call is also coming in from BP Wealth as well as Geojit. However, on the flip side, an avoid call is coming in from Aditya Birla Money. So that's a brokerage note to watch out for. But roughly, yes, this is what this Swiggy subscription looks like so far. 35% subscribed on the end of day 2.
Sandeep, curious to get in your take. It seems like for the most part, brokerages are saying yes for the long term. It's a subscribe to the IPO, 11,300 crores. Given that we already have listed players, Zomato, how are you looking at the competitive intensity and what investors should do within the space as a whole?
The competitive intensity is obviously not as great because these two players dominate the entire space of food delivery. But the only flip side is that one, Swiggy is loss-making, whereas Zomato's improved its cost structure significantly. And secondly, because Zomato did so well, so the IPO is not really coming at a cheap price because it's been priced relative to Zomato. So there could be still some listing upside depending on how the market is. But then he will be loss reduction. So if they can proceed, move on loss reduction over the next few quarters, then the stock would do well. So nothing great per se at the offer price, but still some possibility of some listing moves.
Okay, that's the take on the Swiggy IPO, today being the final day. Many are saying that in the new Trump regime, it's the CDMO space which is going to be largely beneficiary. You've been an observer of the pharma names and, an investor as well over there. Have you expanded your list in pharma at all?
Not really, Aisha. I find it very tough to understand these companies. That's the problem. Otherwise, I think the opportunity could be there for people who can do that evaluation.
Point. So what is it that you've added in the recent decline in the market? Anything?
So I think post results and correction, IDFC First Bank looks interesting to me. Stocks down around 35% from the top. Results, on the face of it, the reported profit numbers were not as great, but then the asset quality held up. And for me, most important thing for banks is how the asset quality, provision coverage ratio, and how the CASA and overall deposit ratio picture is. So I think post correction, the stocks hovering more near 52-week lows, and I would think that it offers value at this price.
Stay with us. Meantime, auto giant Tata Motors all set to report its Q2 numbers. Let's take it across to Shrishti to find out what exactly the ET Now poll suggests. Shrishti?
Well, this time from Tata Motors, we are expecting a decent set, but indeed the margin figure on a consolidated basis, and especially the JLR EBIT margin figure, will be the key monitorable, because all in all what we have seen is that the India business didn't perform that well, because there has been a decline in the volumes for their passenger vehicle as well as their commercial vehicle segment. When it comes to the JLR volumes, that is expected to see a low single-digit decline on a YOY basis due to the supply challenges. But the silver lining in the JLR volumes is that the contribution from some of their higher ends models is being significant. That could actually support the number for JLR division. If we talk about the JLR EBIT margin, that is expected at 8.2%, but sequentially too there will be a decline of 70 basis point if these numbers come in at as per our expectations, but that will be primarily due to the low volumes and the rising discounts. If we talk about the India business, then India commercial vehicle EBITDA margin also expected to see a decline, and 10.8% is what we are expecting, while the passenger vehicle segment, that too saw a bit of a pressure in their volume figure. Margin number expected at 5%, declining from 5.8% what the company witnessed in Q1 of FY25. But let's also take you through the consolidated number expectation. Revenue is expected at 1,05,056 crores. EBITDA is expected at 14,474 crores, while the consolidated margin figure, do watch out for 13.8% is the number what we are expecting. And lastly, on the profit figure, 5,038 crores is the number that we are expecting. But indeed, on the management commentary side, the key monitorable will be the outlook on the various segments of Tata Motors, be it JLR or the India or the commercial vehicle business. How is the company foreseeing the volume growth outlook? That will be the key to watch out for.
Sandeep, autos is becoming like quite the sort of, clear standout sector now, where clearly there's M&M on one hand and maybe a Hero MotoCorp and, Bajaj Auto when it comes to the two-wheelers. Any of these other names wherein you think that the correction has played out quite a fair bit and you would be a buyer?
So, like you rightly said, I think M&M is in a category of its own, sort of, because they significantly upgraded the tractor growth prospects in the conference call yesterday. And that is very positive for them because tractors is a high margin business. So as the volume growth picks up there, and maybe there will be a 2-3 year upcycle. So they really benefit strongly because of that. And on the auto side, although the growth has slowed down, their models are doing well. Although they have indicated that there could be some pressure on margins near term as they try to push their new products, EVs, etc. But still, it will be higher than historical levels. So I think that stock looks very well positioned. Bajaj Auto, after the sell-off of around 25%, should be okay. But I think we need to watch out because two-wheelers tend to do well as the farm sector incomes come in, and the second half is very strong on marriages also, and strong marriage seasons typically are positive for two-wheelers. So I think slowly accumulation of the two-wheelers also could be a good strategy.
Sandeep, what is it that you're penciling in when it comes to SBI set to deliver its quarterly numbers, and just PSU banks in general? Give us your overall view. Would it be a preference towards some of the private sectors versus PSUs?
I don't buy too much of PSU banks, but I think the results have not been bad. So I think some of the results like Bank of Baroda, etc., were quite good. In fact. So I think if that carries on to what SBI also does, although SBI has been much more aggressive on lending than the other banks. So to that extent, whether that hits their asset quality or not is something we need to see. So I think it will all come down to quality, and that will determine how the stock will do.
Good to have you on board. Thanks so much for joining in, Sandeep, and sharing with us your thoughts on the markets. Have a good weekend. Well, let's also find out.
If you like this video, then like, share and subscribe to ET Now.